Hello, welcome to day 13 of my trading journal to help me with my learning understanding of ICT concepts. So in the previous session we were looking at the origin of price delivery, revisiting these trades, making some tweaks to the rules and stuff and just looking at those. I've wiped everything off the chart because I want to come back in here again and continuing on from November to just get used to building up a narrative where price is going to go. So this time I'm going to just start on the weekly chart. Haven't done that in a while. Just want to see what is happening on the higher time frame. So what I want to try and do is I want to get one premium discount array for the weekly, the daily, the hourly, 4 hour, 15 minute, and try and build up like a narrative of what is actually happening. So I guess we could start here. We could start with got a weekly fair value gap here. And we'll put this like that. Okay, so we know price is delivering from here. Remember, we wouldn't have seen this candle yet. We'd probably still be looking at this candle or something. Okay, let's look back and see if we can find a target for where we think price is going to head to. So we've got this here on a weekly. Okay, so that kind of gives us, a weekly narrative to work with. We can see price took this buy side here, then retrace back into the weekly fair value gap. We've got the most recent area of sell side liquidity here. So I'll put that weekly sell side liquidity. And then if I just remind myself of what breakers were again. Let's go look at a bullish breaker here. A low, high, lower low. Okay, so we could be looking at this candle here as like a breaker as well. We could be using this low. We could be saying this is a low, that's a high, that's a lower low. So okay, whether we're looking at these candles, this candle as a breaker, that's kind of close to this fair value gap as well, so we can just use that. Okay, let's drop down to a daily. And well, that's the 15th there, isn't it? We haven't seen what's going to happen next. Okay, coming at this. So this makes me think we should be going into Thursday perhaps with a bullish bias. I guess we should just map out the closest PD array. So we've got, see, that's balanced price range. We've got this here, haven't we? Daily fair value gap. And in terms of a premium daily array, we could look at this. We're questioning whether, you know, well, actually we've got this area here that's a volume imbalance. And that's one of the things we had marked out before I cleared everything off the chart here. So when I, you know, when I go down to a 3 minute, when I go down to like a 3 minute chart, you know, I'll have this higher time frame narrative to work with. Okay, so let's. We've also got these relatively equal highs here, haven't we? So I'm going to put that as daily equal highs. Okay, that gives us something to aim for. Let's drop down to a 4 hour. So that 4 hour fair value gap lines up quite nicely with our daily, so there's no need to change that. Okay, I'm not really seeing anything that sort of stands out there. Let's just drop down to 1 hour, see if anything else stands out. Okay, so we've got price, what appears to be price rejecting off this daily volume imbalance. We haven't hit the daily equal highs yet. So from this narrative, I think we're going to be trading the 15th, aren't we? Oh no, we already did the 15th. Okay, yeah, that's fine. Just wanted to make sure I wasn't looking at it. Okay, so it's this day here, the 16th, isn't it? Yeah. Okay, fine. Well, while we're on the 15 minute as well, let's okay, yeah, so we would be looking at this Wednesday. We're planning to trade. Obviously we didn't want to trade the morning session now that we decided we're just going to avoid these news events. We don't have any economic calendar events for Thursday, so we can trade that. I guess I should be coming in here and looking for 15 minute PD array. So we've got this one here. And since we can see price starting to tap into this, you see, it's easy already forgetting what it was. Let's bring this in a bit so we don't have to keep zooming out. So it looks like price, because you know the question we have to ask now is, okay, is price gonna, how far into this daily fair value gap is it gonna go? Yeah, it looks like price is bouncing off here, and that actually draws my attention to equal lows, which looks like liquidity. So we'll put that as 15 minute equal lows. And so we'll be doing this, you know, the night before, you know, at the end of Wednesday, going to go to bed, trade Thursday. We want to have all this stuff on the chart, you know, with the pre-market analysis. Don't want to go overboard. I don't want to have red and green boxes everywhere because that's gonna, you know, can obviously be more confusing. But I guess now we'll just we'll wait for the overnight. So there's the London session, and then we kind of come up on. That's 8:15. Okay, so it looks like price is taking those equal lows there. This is just the kind of stuff we want to be looking at when we get to the chart. And what I'm going to do is really, I think we should be using the lowest of the equal lows, which is here. And that gives us a more defined goal now. Okay, so looking at this, should I be bullish or bearish? I think the daily bias is a little bit more complicated than just, you know, bullish or bearish. It's more of a narrative thing where I'm kind of I mean, I could be wrong. I'm anticipating, you know, this is a daily fair value gap. We've got equal lows here, so we've come into a discount array here. I'm anticipating that price is going to want to maybe come into these lows here. I want to see a clearly taking that liquidity. I'm not expecting a massive range though, because we delivered from the daily volume imbalance. Sort of rejected this 15-minute fair value gap there. And now moving into the morning AM session, New York. Now we want to wait and see what happens. So that will be the first. That will be 8:30 there, won't it? We drop down here. Okay, so we've seen the first few candles. Okay, so we're looking at this. We've got levels. We obviously want to make note of the London equal highs as well. I'll probably just extend that out to these overnight here. So we'll just call that equal highs. We got the the PM highs all the way up here, and they're actually quite close to. Oh, sorry, that should be in red, shouldn't it? Sorry, I know this isn't very exciting to watch, but if you ever try trading for real, it's just a lot more difficult than it seems. So that's PM highs. Oh, I'll just call it sell side liquidity, just keep it simple. There we go. And then one could also argue that we've actually purged the London equal lows as well. This is one of the difficult things is trying to decide when liquidity has been taken or not. Okay, so what picture does this paint? I mean, we've formed these equal lows here. I mean, you could even argue we took these overnight lows here. In any case, we definitely took these PM session lows. So I'm actually looking at this, and I'm actually seeing this move here as possibly the Judas swing. So let's say this, you know, let's look at it through the lens of our 2020-2022 model. Okay, we have buy side liquidity taken. Yeah, we definitely have that happening here. We have a market structure shift happening here. So rather than writing this on the chart, I'm just gonna, you know, we've seen that happen here. Okay. Market structure shift, close below old load, wicked above swing high. Not delivering from SIBI. Nope, it's delivering from a BISI, so that's good. Didn't break equal highs. Those do kind of look like equal highs, don't they? Well, they're not equal. They're not perfectly equal highs. Equal highs is a very rare thing, so it's more significant. So that's fine. Let's do one more candle. We want to see a fair value gap form once the market structure shift is taken. And we're below the New York Open. So then we do our fib. We're using this to try and just figure out where our discount area would be. So we've got this here. And we're using the low to the high to kind of form, get our kind of discount area. But I've seen ICT when he's looking for this standard deviation. He, instead of using the actual high, he actually uses the level where a market structure shift occurred. So I guess that would be here, wouldn't it? That's where like the significant market structure shift happened. And he'd be using that, which would give us these equal highs here. So I'll probably just keep that in mind as well. But yeah, that seems to meet all the conditions. So I'm going to put in, let's see how, so this low is protected here, but our you see, I've been thinking about this, right? We want the stop loss to be here. If it's just a couple of pips away, should I just maybe like at least just do that? I mean, obviously if the risk would need to be like that, then there's nothing we can do. But if it's just, we'd like the swing low to be protected here. Obviously less of a chance of us getting filled. And then we'll go for, say, something like that. And let's see what happens. Okay, so looks like price is just gone. Well, hang on a second, it didn't actually take those equal highs, it got really close. So once these equal highs get taken, that's kind of like a purge of internal liquidity, and then we'll be taking this trade off the table. So okay. Yeah, that's not going to look good. All that liquidity's been taken now, so price might, now that it's done that, it might want to come back lower here. So I think I'll just have to take that trade off. Because I can't enter a buy if price is originating from a premium array here. Okay, so price, what is it going to do? Okay, so it comes back to our fair value gap. Wow, kind of smashes through that. This low hasn't been taken out yet. And then let's see what happens. Whoopsie, skip forward too much. Okay, so yeah, if we'd entered here, we just about would have been okay with the 18 pips. And if we wanted to make sure our low was protected here, we could have done that. You see how hard trading is, right? Just the uncertainty. So so now I guess, let's see. where's the next area of liquidity? Well, we've still got these equal lows down here, and I really don't like that because I'm seeing this really smooth level here, and I'm just really concerned that price is just going to want to come down and smash through there, especially when I see like okay, so yeah, I have to kind of learn how to like trust this higher time frame stuff. So now I guess I kind of feel like we've seen price respect this fair value gap. It's also closed above an inversion fair value gap. So buy side liquidity taken, market structure shift. We have a single inversion fair value gap here. That's a key thing as well. If we're going to omit the fair value gap, there has to be a single inversion fair value gap. Would the entry be within a discount? Well, it would if we were using the fair value gap. And then, did the current price rally start below the New York Open? So this up leg in price here originated from the New York Open here. So I think what we'll do is we'll try and see if we can enter within this inversion fair value gap. We don't have a large enough stop to. We want to try and cover that low. So at least if we enter here, at least this stop. We'll have our stop loss here at the swing low, and we can aim for the next area of liquidity. Yeah, definitely could be wrong. I mean, trading's about being wrong, but let's just see what happens. Okay, so we were completely wrong there. Came back down to these equal lows. Okay, so that's a loss there. That's where we would stop trading because I can only trade the morning session anyway. So we're wrong about the entry there. Let's see if our analysis is still correct. I'm going to keep taking trades because this is a demo and this is a back test. It gives us more to like analyze. Guess question is that a proper run on liquidity now? I would like to see price make a nice move below it. Yeah, that definitely feels more like... Yeah, okay, that's definitely closing below the equal lows there. You know, without having, you know, this daily fair value gap here and everything, you know, we wouldn't really have any sort of narrative. Like, we're still anticipating price to go higher. It's just that we talked ourselves out of this one here, which would have been a nice trade, and then wrong about the entry here. Shouldn't have taken a long position once we were, you know, once we'd taken equal highs. That was, you know, a purge and internal sell side liquidity here. So that would have, we should have been looking at this as a down leg in price, but it's fine. We're below the New York Open now, so maybe we'll get a... Let's see what we have here. Okay, so this is buy side liquidity being taken. We've got a swing high here. The candle was closed above there, so it's a market structure shift. Do we have a fair value gap in here? No, we don't. Okay, that's a fair value gap, so I'm just gonna anticipate that will be the swing low, swing high, and then we've got a fair value gap here. Below the New York Open, within a discount. Yep, and then let's just go and enter in the discount area. I really don't like this, because in order to have the stop loss covering this low here, it'd need to be over the limit that I've kind of set for myself, so I really don't like doing that. I'm going to aim for the previous high. And let's see if that is indeed the swing high. Okay. Okay, so now we can enter here. Might get stopped out again, that'll be unfortunate. Okay, so at this point, kind of feels like price might be going without us, and of course then the kind of compulsion would be to like try and enter here. There's nothing wrong with that, but I just don't know if price is going to come back down here again. It never really gave us a fair entry or anything like that, so you know, no point trying to chase price if it does go up to here. At least I kind of, you know, obviously we picked the entries are wrong, but we're getting closer to understanding, you know, there's bias working out. Like we knew that, we anticipated that, you know, this was liquidity, price was going to make a run in here. You know, I guess in hindsight it might have been better to just wait for these lows to properly be traded through before we started looking, but this hasn't really given us an entry. Okay, let's see. Let's look at this, and we'll see if there's maybe a more obvious. I don't want to see what price does before I decide where to enter. Okay, so we've got a fair value gap close to our. Let's see if we go to the 15 minutes. See if we get. We could move this here. That was the 3-minute one, but if we move it there, we've got that fair value gap on a 15-minute. We'll mark that as 15-minute fair value gap. Go back to a 3-minute. Okay, so let's remove this. We've got a 15-minute fair value gap, so I think I'll keep a. I mean, provided we are delivering from price has originated from a discount array. So yeah, we haven't. Price got really close to taking out this high here. Fell short of it just before hitting it, and so when we see something like this, that's where we wouldn't want to be taking a sell position, because you know price almost hit here but didn't quite, so it's likely it might come back and make another move up there. So I guess the question is our fair value gap ever going to get traded into? I mean, sometimes price will come down a lot lower than you expect before going back up. Okay, there's the PM session. It's getting quite close to our standing order here. Guess we'll have to see what happens. Right, it's entered us into the trade. That's kind of a... Now this is the worst part. Waiting to see if is this going to be a reversal, or is it just going to smash right through and stop us out? Just going to have to wait and see at this point. I've done the best I can do with my analysis here. If it trades through, I just really don't know what to think, to be honest. I mean, yeah, let's at least use this high here. PM session ends here, so we've still got time. Okay, looks like price is starting to spool upwards. That might be that algorithm that comes into play in the afternoon. Yeah, we should just try and get our low-hanging fruit objective. I just don't want to be waiting around for a retrace, so let's just see if it's going to hit our objective, our low-hanging fruit. We'll make a note of these are discount arrays. If 3 of these fail, then we're basically fucked. Okay, so that one's failed. Next is the lows here. Gonna have to extend this out. We're gonna have to end the trade once we get to here, regardless of what our profit or losses. If that doesn't make a swing high, I'm gonna put the stop loss to break even. Okay. Bit of a... You see, in an ideal world, like the reason I have the stop trading once you've taken a loss is because being a beginner, I don't know if I'd be able to think clearly enough to execute a position like this. I would probably end up, you know, doing something stupid like, I don't know, chasing price as it goes up or something like that. Let's just see what price does for the remaining few minutes of the day. Okay, so we got out a pretty good position. Honestly, doing this has used up a lot of my I was going to try and do a few day, do the next few days, but I think I might take a break and then upload the next video as like a separate one, because I just want to sort of do, you know, just kind of have a look at what happened here. So yeah, talking about daily bias, I just think it's more complicated than just saying I'm just going to be bullish or I'm just going to be bearish. I mean, once we, you know, on the daily perspective, we saw price delivering from, let's go to a 15-minute, for goodness sake, go to a 15-minute. So okay, we see price rejecting the daily volume imbalance. We see price tap into a daily fair value gap, comes back up, comes very close to this 15-minute SIBI, comes back down here, create 2 equal lows for the PM session. Then overnight we had so I don't really think I did anything wrong. Let's look at the trade that failed. Okay, so I did actually do something wrong. The whole idea is that you don't try and take a buy. You don't try and buy just after sell side liquidity has been taken. That was an oversight there. You know, obviously, if I'd seen everything in hindsight, you know, I wouldn't be making mistakes like that while recording this. So the fact there's like mistakes here, like, you know, wouldn't it have been nice if we'd, you know, because we said we were going to put the stop loss here, so we're going to enter here or something. Once I saw price rejecting off of this high here, I took this trade off because I was worried that, like, okay, price might have taken internal liquidity, might want to come and smash down below here, and it is actually what happened. So this like analysis was correct. It's just unfortunately we could have got, you know. Okay, but once I saw that, you know, I'd missed a trade there, then I was like even more eager to get in a trade here, and that eagerness made me completely forget what I just explained, you know, 5 seconds ago, which is that you don't want to enter a buy. You know, maybe this was debatable because, you know, that didn't really take liquidity. That was just sort of like give it a little love tap, whereas this traded right through it, you know, clearly took out this, had the internal liquidity, sell side, and then it was going to head to buy side, and so, you know, it really didn't make sense taking this trade here. If anything, it would have made more sense. I mean, now that we've had time to look at it, we don't need to keep looking at it. If anything, it would have made more sense to be looking for a sell here, like, for example. I mean, yeah, so you would have been, once that internal liquidity been taken, you'd be looking at, you know, I mean, I would have got stopped out if I'd done this, but you'd be looking for a sell down to the next, you know, low. The reason we wouldn't do that is because we were keenly aware of this, well, the daily fair value gap, the equal lows formed across 2 days, you know, Tuesday's PM lows are pretty much identical to Thursday's overnight lows. So, you know, this is a 3 equal lows formed over almost 3 days. That's a pretty significant level to be rejecting off, you know, significant level of liquidity. We're rejecting, originating, we've already rejected here, and then we've rejected here, so we wouldn't, you know, the whole day we were expecting price to bounce off here, go towards one of these targets or something. So the whole day we're looking at this through the lens of trying to just pick the right spot to get in on a, you know, a buy. I mean, of course, like, we could have just, if you really that certain that the price is going to go up, you could have just, like, as soon as the day opens, you could have just done something like this. But, you know, obviously we can't possibly do that. But yeah, like, even with ICT concepts, I'm starting to feel like, as good as they are, it is just another lens in which to view price action from. Like having all these rules is a really good, you know, start, but I don't think there's any way around being able to build up a narrative that starts on a weekly, to a daily, to an hourly, to a 15-minute, all the way down to, you know, 3 minutes and below. Having a whole, like, narrative, understanding where price has gone, where the liquidity is. I don't think you can really represent that with just a five-step plan. So yeah, I think I'll take a break, and then I'm gonna trade the next day after I've had time to sort of, yeah, reset and everything. Because if I just kind of go forward now, I need some time to like properly remove all of this again, and then draw it back, and then do the narrative from scratch, and then well, I mean, the first thing we'll do is there an economic calendar event Friday? No, there isn't. Okay, good. Yeah, I'm just not going to bother doing those. Okay, so I'll wrap things up here. Let me know if you have any questions. Thanks for watching. Bye.